Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from Maria. Maria writes from Wallington, New Jersey. And Maria writes, my partner and I have decided to buy a home. What can we do to get the lowest mortgage interest rate when we buy? Well, that's a good question, Maria. Most people, particularly first-time home buyers, assume that when they apply for a mortgage loan to buy a home, that they're going to get the prevailing mortgage interest rate that they see advertised on the internet. And that's just not necessarily the case. There are other factors at play, one of which is your credit score, which plays as major a role as anything else in determining whether you even qualify for a mortgage, but what mortgage interest rate a lender is willing to give you. Good news is that your credit score is something that you have enormous control over. So I'm going to give you 3 ways to boost your credit score before you apply for a mortgage loan to buy a home. And the first way to boost your credit score is to lower your credit card balances. So your credit utilization ratio is the percentage of outstanding credit that you have as a percentage of all the available credit that was provided to you by a lender or credit card company. And so if you want to get the lowest mortgage interest rate when you apply for a mortgage loan, you want to get your credit utilization ratio below 30%. So if you have a $10,000 credit card, that means you want the balance to be below $3,000. If you have a $5,000 credit card, you want your balance to be below $1,500. If you have a $20,000 credit card, you want the balance to be below $6,000. So you want that credit utilization ratio below 30%, and if it is, you're going to get a lower mortgage interest rate when you apply for a mortgage when you buy a home. The second way to boost your credit score before you apply for a mortgage is to check your credit reports with all 3 major credit reporting bureaus. And you want to, look for mistakes, particularly as it relates to late payments and closed accounts, because those can negatively affect your credit score and unfortunately maybe cause you to pay a higher mortgage interest rate than you otherwise would. And the third way to boost your credit score before you apply for a mortgage and buy a home is to pay your bills on time. And that may seem obvious, but missed bill payments can stay on your credit report for 7 years. So one way to prevent missing payments is to set up auto payments on your credit cards and other bills. That way you can't accidentally miss a payment. It'll automatically go through. So thanks for your question, Maria. For more real estate tips and information, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.